Hey there! Welcome back to LexaWise's real estate exam prep videos. Today, we'll cover 10 key terms that are absolutely essential to ace your licensing exam. These terms will give you the knowledge you need to tackle those tricky questions. So, grab a notebook and get ready to level up your real estate game. If you're new here, don't forget to subscribe and turn on notifications. We're here to make sure you crush your test on the first try. Let's jump right in.
LexaWise Real Estate Exam Prep.
This is how we'll do it. I'll show you a definition and give you a second to think. Then I'll reveal the term and break it down for you. All right? Let's start with the first definition. See if you can figure out what it's describing. A written justification of the price paid for a property, primarily based on an analysis of comparable sales of similar homes nearby. Think about it for a second. Got it? It's appraisal. For example, if you're buying a house, the bank will require an appraisal to ensure the property is worth the loan amount you're applying for. Now, let's move on to number 2. A legal arrangement in which a third party temporarily holds money or property until a particular condition has been met. I'll give you a moment to think. Let's see. The term is escrow. Think of it like a safety net. It ensures everyone plays by the rules and protects both parties throughout the process. Number 3 on this list. Lien that is imposed on a person. For example, a property tax lien imposed for unpaid property taxes. Can you guess what this one means? Ready? Involuntary lien. Before a property can be sold or refinanced, any liens, like unpaid taxes or mortgages, must be resolved. Liens are a big deal in real estate, so make sure you understand how they work. Now, number 4. A person's right to or ownership of a property, including the right to sell. Take a moment. Got it. Title. For example, a clear title means there are no disputes, debts, or liens affecting it, essential for smooth transactions. If the title isn't clear, it can delay or even cancel a sale. Number 5. The process used to deduct the costs of buying and improving a rental property. This one is tricky. Do you know it? Think. The answer is depreciation. Depreciation represents the decline in a property's value over time, often due to aging, wear, or becoming outdated. Next is number 6. A way to pay off debt in equal installments that include varying amounts of interest and principal payments over the life of the loan. Take a moment to guess it. Ready? Amortization. In other words, amortization is the process of paying off a loan over time. For example, early on, most of a payment covers interest. Over time, more of it goes toward reducing the principal balance. Number 7. Let's see. The legal document conveying title to a property. This is very important. Take your time. Deed. Did you get it right? A deed is a legal document that transfers ownership of property. There are different types of deeds, like warranty deeds that offer full protection to the buyer, and quitclaim deeds that transfer ownership without any guarantees. Now, number 8, a homeowner's financial interest in a property. It is the difference between the fair market value of the property and the amount still owed on its mortgage and other liens. Think about it. The answer is equity. Did you guess? Equity is the portion of the property's value that you own outright, after subtracting any debts like your mortgage. For instance, if your property is worth $300,000 and you owe $200,000 on your mortgage, your equity is $100,000. Building equity is a solid long-term investment goal. We're almost at the end of the list. Here comes the next. A right of way giving persons other than the owner access to or over a property. Take a few seconds. Got it? Easement. An easement gives someone else the right to use part of your property for a specific purpose, like utility companies accessing power lines or a neighbor using a shared driveway. Remember, easements don't give ownership, they just grant usage rights. And finally, number 10. The rate of return a property will produce on the owner's investment. Tell the definition. Got it? Capitalization rate or cap rate for short. The formula is net operating income divided by market value. For example, if a property's net operating income is $10,000 and its market value is $100,000, the cap rate is 10%. And there you have it. 10 super important real estate terms for your licensing exam and your career as a real estate agent or broker. If you found this video helpful, don't forget to like, subscribe, and share it with fellow exam preppers. For more tips, resources, and practice exams, join LexaWise Exam Prep. I left the link in the description below. Thanks for sticking around till the end. I'll see you in the next video. Good luck and happy studying.